Hi friends, welcome to JD's Guidance once again. Friends, let us continue our discussion on the casual accounting. And here, if you remember, we have covered two lectures. The first lecture was on the meaning of accounting, accountancy and accounts. We have seen how these three terms are different. Then we have proceeded to our next discussion, that is in lecture 2, to see who are the users of financial information. That means how accounting serves the informational needs of various parties. And today we are starting another fresh topic that is very important, that is accounting cycle. So let me explain you what is accounting cycle in a very simple manner. So friends, we have seen that in a business there are transactions. As I have already told you, that transactions are any events that takes place in an organization, right? So remember, accounting does not have much to do with non-monetary transactions, right? So we are talking about all those transactions which happens in money terms, where there is involvement of money. So we are trying to recognize all those transactions which are being undertaken by a business. So we call them transactions. So once you have recognized the transaction, your job is to record them, right? So you are doing the recording because you cannot remember all the transactions, and also you want to know end of the year what has happened. So that's why you have to do the recording. The first place or the first books where you will record is known as journal. So friends, remember, journal is the first place where you will record all the transactions. We will see in our later lectures that how we have to maintain a journal. So journal is the place where you record the transactions for the first time, right? After journal, you know what is happening in journal is that you are recording all types of transactions, whether it is a payments for wages, payments for electricity bill, payments for insurance premium, payments for rent. Also you are recording purchases of raw materials, purchases of furniture. Also you are recording sales related transactions, sales of goods, etc. So multiple number of transactions are recorded in journal. So journal is a mix up of all types of transactions, but it is also important that we segregate or we separate those transactions, and for that we prepare separate accounts. For example, all purchases will be recorded in one book, that is purchases account. Another one will be recorded in sales account. Another one will be recorded in all related expenses account. So this way we are trying to classify the account. Okay, so remember, ledger's job is recording. You are recording the transactions in ledger, but journal's job is recording. You are recording the transaction in journal, but in ledger what you are doing here, you are classifying. That means this is related to this, so you post it in that particular book. This is related to something different, so post it in some other book. So here you are classifying the transactions, right? We will see how to do ledger. So first thing, we have recorded, and then the related items are classified in one group, in one ledger. Okay, now see, from here to here there could be some mistake. You could have removed 1 0 or added some extra 0, or there can be some calculation mistake. So for to give a check, we prepare another account, and that is known as the trial balance. So here in trial balance, we are trying to see the arithmetical accuracy, that is whether whatever we have done so far, if there is any if there is any disagreement, then we have to, for that we prepare a trial balance to check whether things are properly recorded and properly classified without any mistakes or without any errors, right? So trial balance, how will you know whether things are fine or not? For this, you have to see that debit DR should be equal to credit CR. Remember friends, we will learn about what is debit and what is credit later on, but for time being, remember, if your debit and credit, they are both equal, that means so far there is no problem. Okay, now if there is any problem, then you have to rectify it. So we will learn rectification also later on. We will learn what are the different errors that can be caused. Also we will see how to rectify those errors. Fine friends. So then after that, what happens, if trial balance agrees, then we will go for the preparation of financial, or we can say we can go for preparation of final accounts. So final accounts of the business is very important because this gives us the state of affairs of the business after 1 year or accounting year is completed. So final accounts can be classified into three types depending on the nature of business, depending on what type of business it is. So we prepare a trading account. We will learn about it later on, don't worry. We prepare a profit and loss account, and finally what you prepare, you prepare balance sheet. So we will learn what is trading, what is profit or loss, and what is balance sheet later on. So see, whatever we have done has gone step by step in a sequence. First you are recording the transactions, then you are recording properly in a journal. Okay, sometimes transactions are recorded in a book, a rough book. We call it memorandum book. Okay, so not so important. It is just like a rough book where you are writing. From rough you are recording properly in a journal. From journal you are posting it in ledger. You are classifying them in ledger. From ledger you prepare a trial balance to check things are going fine or not, and then you prepare final accounts. Final accounts has got different components, not necessarily that only these three, there are some more also, but for simplicity let's remember that we prepare these three accounts. So this entire thing is known as accounting cycle. Okay, the whole thing is known as accounting cycle because it goes like a cyclical manner. So friends, we have understood what is accounting cycle, and we know that accounting cycle is nothing but a step-by-step procedure that a business follows in its process of recording, classifying, summarizing and interpreting the business transactions. Friends, this is all about this video. There is a question that you can have it for your practice. See you in the next video. Bye bye.